Any person who would like to invest can fall into various personas, right? So we did a market analysis to understand what kind of personas are there. Some people are new to investing, so they don't know how to get started. Then there are few who have made losses in the market by trading in derivatives. So we cover all these personas.
Right.
So we get a new person started. Also, we provide all the analytical solution on the platform so you can use it. So we got the co-founders in the room and said that how much capital we need to start with. We brought that in. Even the SEBI regulation asked us to have 25 lakh rupees in the account to start. So I think the idea was there, but it evolved. It evolved based on because initially we gave it to a smaller circle of friends and family. So we got a lot of feedback. So we refined the product. So what we do is we do a regular webinars. So it starts with basics of investing. Somebody who wants to understand various asset classes, we can explain it. We do, the Gen Zs are one which mainly look for liquidity.
Right.
I think that is because risk management is the key. Don't let that go. And equity is a very good asset class. Mutual fund, direct mutual funds is a very good asset class where the liquidity is there. So we focus around these asset classes because most of the stocks have already run up. So momentum is missing. You go to the value, but there are times when the market is on an all-time low. What do you pick? See, we have seen IPOs of these stocks coming in. Zomato listed at 120, came down to 40 rupees and now gone back. So it had a growth story to ride on.
Right.
But it is not the story for all the startup.
Hi Manish, welcome to Talking Through.
Thank you.
Before we discuss anything further, would be great if you could, introduce yourself to the audience. That would be great.
Yeah, of course. And thanks for having me here. I'm Manish Ahuja, co-founder IntelliInvest. It's a wealth tech solution. So I started off about a year back. And prior to that, I have about 20 years in investment banking experience. Now this has been across Nomura, BNP Paribas, RBS, and Danske was my last company. So that's me. Besides that, I have done my post-graduation from IIT Delhi and then masters in finance and strategy from IIM Indore. So that's me.
Yeah, I mean that's a lot of finance to be honest, from start to bottom. So tell me something about IntelliInvest, and after such a long career in the corporate sector, how did you stumble upon this idea?
Yeah, well, I started IntelliInvest about a year back officially. The idea was always there with me for a long time. So I've been using a lot of analysis myself, which covered technical, fundamental, industry. So I built a lot of indicators for myself. So I've been doing that for myself for a long, long time. And then it has evolved to a certain stage where it could be used by others as well. So we thought about, can we just put it across to our friends and family and say, how does it go? And that we did for the last couple of years. And the friends and family did well as well. And then it was good to see. And then last year we took the plunge and put it for everybody else to use as well.
Oh, that's great. So it will be also great if you could explain how the product works a little bit.
Yeah.
Because that will also, give us more idea how to use it, basically.
Any person who would like to invest can fall into various personas, right? So we did a market analysis to understand what kind of personas are there. Some people are new to investing, so they don't know how to get started. Then there are few who have made losses in the market by trading in derivatives, how to get them to a real investing solution. And then the third category is those who have the money but don't have the time to do all the analysis. Right. So they would like it to be managed. So we cover all these personas.
Right.
So we get a new person started. Also, we provide all the analytical solution on the platform so you can use it and create your own strategies.
Right.
We have integrated it with brokers, almost all the popular brokers. And what that means is it's an end-to-end journey. So from landing on the app, you can understand your risk profile, you can decide how much you want to invest, and then there can be strategies which are suited to your risk profile. You can choose from them, and once you choose, you can directly execute with your broker and your portfolio gets managed.
Right.
So I think that's the solution which we have built. It is a one-stop solution which we have tried to come up with.
Oh, great. Is there a minimum entry capital that you recommend using your thing, or is it open for everybody?
So there are various strategies.
Yeah.
So we have strategies for newbies as well. So it can start from 20,000, 30,000 rupees as well. They can use it. They can sip it and then keep increasing their investable income. The second part is people who already have have that exposure in the market. They can pull in their holdings onto the app, get an analysis done, and then can switch strategies. For that 2.5 lakh rupees or something is good. That you can start. You can go up to as much.
As much as
we have all sort of strategies which are available for risk takers, for risk averse investors, everybody.
Oh, great. Because it's good to know that it's for everybody and it's not for only people who are used to doing something like that. Tell us about your journey of founding IntelliInvest. I know that you've been funded, but what was your journey when you were bootstrapping? How did you get funding? If you could also share that journey.
And that's an interesting one. So since I had a long corporate career and I had done a lot of investing myself, so I think initial capital was not a problem to start with. So we got the co-founders in the room and said that how much capital we need to start with. We brought that in. Even the SEBI regulation asked us to have 25 lakh rupees in the account to start. And then we got early support from one of our friends who believed in the idea and he put in angel fund. So that became our initial money capital, we have not spent that also till now. And then about 3-4 months back, one of our early investors came down and said, Manish, I have doubled the money in the last 1 year, 9 months, right? So can you keep the other half and give me IntelliInvest equity?
Right.
So then that was like a surprise, right? And then at that point in time, we were not looking for funds at all. But we are being advised by some very good I would say startup people. So what guidance we got from them was you can now open it up for other angel investors as well.
Right.
And so we opened it up, and actually we closed a decent round, angel fund recently, and so we are well capitalized now, and now we are expanding the product line, we are expanding the team, we are setting up a sales vertical as well. So I think it's a good place to be in.
Yep, that's great, good to know. And obviously I would also want to know, when you thought about this idea and when you built something which is like an MVP or something, how much time did you take? Was it very quick or it took some time for you to think through it?
So I think the idea was there, but it evolved. It evolved based on, because initially we gave it to a smaller circle of friends and family. So we got a lot of feedback. So we refined the product. And then we made a product fit for the market. So that is the process we went through. Initially, it was very basic. It was just had strategies, people can subscribe, only a couple of brokers supported, and then only orders getting executed, not much of analytics on the app. But then we brought it in because we wanted to cater to all the segments as well. So it has evolved. And I think the product, if I tell you the journey, how it has been, you will not recognize what it was a year back and what it is now.
Right.
So we believe in a lot of feedback from the customers, what they would like to see, how they would like to get it evolve the product, right? And we are very fungible. We also decided that once we go live, we will make changes based on what the customer wants.
Right.
So I will take a back seat and not decide the journey of the user experience. It should be decided by the customer themselves.
That's a very unique thing to do, and also maybe difficult also, because you'd be hearing so much, right?
Yes.
Tell me something about when you run IntelliInvest. How do you manage technology? How do you support that? And what I want to know is how difficult it is to have like an in-house team building your app versus putting it out there to a vendor, something. Because I've heard both stories, so I would like to hear yours as well.
Yeah, that's also something where we have received a lot of feedback, because people say that the technology can be outsourced while we have a total in-house team. So the capability sits within. Now the advantage with that capability is you can actually leverage technology in a very unique sense. So if I really want to send a notification to just you right now, we have that capability. Just you, and then based on user behavior, I send the notification to you and to some others. So those custom. So if you really want to do hyper personalization, let's say,
Right.
that's possible if you have an in-house team. How much would you explain it to a vendor, so to say? So, but I'm not saying the other side of the story is also, we have success stories there.
Right.
This is unique to us. We have a very good in-house team, people who have done this earlier and now are building on top of it.
Right.
So that way, I think I'm blessed to have that kind of a setup within IntelliInvest.
That's great, actually. Another question about technology is, because I'm very intrigued by both finance and technology, and I read about it quite a bit. You must have heard that, artificial intelligence and ChatGPT is going to change and disrupt a lot of industries. How do you think that is going to disrupt the wealth sector?
Yeah, I think AI is going to play a big role, not just with finance, but probably all the sectors. The reason for that being, now we are talking about more around generative AI these days. And now a logical bearing, another version is coming as well, which can interact with you as well in that fashion. But AI is more than that. AI is also about deep learning and learning from the data and then using it effectively. So while generative AI can be a customer-facing tool and create more engagement in a very digital way, in a human-centric way, I feel in the finance space, it has more to do with the learning part.
Right.
So learning from history, learning from events which has happened in the past, and probably guiding us how to deal with the future if it happens in the future. And that's what we do.
Right.
So we have built a very unique solution. It's called Stock Price Predict. We do stock price predictions for 1 month in advance.
Oh.
Now, people can say that because so many variables are there, right? It might work, it might not work. But what we do then is we say historically how accurate we have been with the same predict.
Right.
So based on that, you can think about how accurate we would be in the future.
Right.
And even more about the prediction accuracy part, if it generates tradable insights.
Right.
And then you trade on that, and then the accuracy goes even higher because then you are trading on a subset.
Right.
So I think AI is going to play a big role because data is everywhere. You have to make sense of it. Making a sense of it in a formula is not possible. Getting the AI to learn on top of it and making sense of it, and then you using it and verifying it. I think that's the path forward.
Right. And just out of curiosity, how has been the probability of the predictions like?
Yeah. So if I tell you in the entire landscape of 3,500 stocks, 62% accuracy is what we have seen in terms of predicting the direction.
Okay.
Where it would go.
Right.
It's positive or negative, or so that directional predictions. As soon as I increase the market cap of the company, let's say 10,000 crores and above, the predict quality goes up to 72%.
Right.
So directional predict.
Right.
I go even further up. I go to Nifty 500 stock or Nifty 100 stocks, it goes up to 80%. So what that means is that the more the data you feed it, the more it learns, the better the prediction gets.
Right.
And then that's why the more liquid stocks, we are able to predict much better.
So the more stable the company, the more data that is available, which is accurate, that helps your predicting model to predict better. Right?
Yes.
Right. And you were also talking about SEBI regulations and everything. And how do you think regulation will play a part in this AI and wealth finance marriage, right? Because do you see regulations hindering the growth or regulations helping the growth?
Yeah, very interesting question. And I have been intrigued by this quite a lot as well. There was a paper which came out from SEBI recently, and it talked about that you can use AI in your research. But the only thing is you need to flag it to the user that this data is coming out from an AI engine. What that means is they have given us a green signal to use AI as much as possible. It's a very positive sign for the industry, and we are leveraging it as well. The point is, how far do you want to take it? Now, there would be few who would not use AI, but say it is AI and then show it to you. So actually, it is all the regulation then comes who is actually using it and who is not using it, and how true they are to their words.
Right.
So I think regulation has to come and counter that thing and not counter the AI use per se.
Right.
So I think that way SEBI has done a very good thing, and it has given us a green signal to all of us to leverage it.
Right, right.
And it is for the better for everybody, right?
Right. Which brings me to my next question is customer education. Not only in terms of, because you have a product, so you have to also educate your customers. So how do you educate them on like basics of investment strategy or even advanced level strategy? And also how to use technology? How do you do that?
So what we do is we do a regular webinars. So it starts with basics of investing. Somebody who wants to understand various asset classes, we can explain it. We do every fortnight, a month. And then we do advanced courses, or rather the webinars for people who want to do a deep dive into strategies. We have got a strategy builder ourselves. So how to use that tool to create your own strategy.
Right.
So we do, and depends upon what customer needs actually. So education is very much part of this, because we really need to get people out of that mindset of trading, because it's more gambling, and to coming to investing, which is much boring, and then but it's for long-term wealth creation. So I think it's an educational journey. And even in mutual fund, if you know that a lot of people buy those mutual funds, don't buy direct mutual funds, but are buying it from some LIC agent who is selling it to them and earning a lot of commission. The difference between the return is, I can give an example. I was just looking at one. The return of a direct was 77%, and return of the sold by the agent was 66%.
Oh.
11% difference in a span of 3 years. And you look at it and then say, somebody needs to educate, right?
Right.
And that's missing. And so we have also picked up that and do as part of our webinars and try to
educate people.
Yeah,
which is a great thing, because what I sometimes feel missing in our education system is like how to start investing your money when you start earning, right? Because a lot of people who I speak with, specifically Gen Z, so to speak, when they start earning the money, they're not very sure what are the kind of options they have to invest their money, either in the equity market or more stable investments, so to speak, debt or something, FDs or whatever. But do you also interact with like the Gen Z generation, and if you do, or what kind of questions they have for you, or what kind of challenges they have?
Yeah, the Gen Zs are one which mainly look for liquidity.
Right.
I think that is because they want to move around, they want to go places, but at the same time invest and use that money in the future. So liquidity is a big driver for the Gen Z population. They are also very much attracted towards the derivative segment, and this is all because of all on the media, right? And they are on Telegrams, and Telegrams you have all these channels which like keep pushing to you these kind of tips. Make you double your money in 3 months or whatever, right? And all those kind of things are happening. So they get attracted towards it. But when we interact with them, we say wealth creation is a long-term journey. And my message to them is always like, go slow. And it is boring, but it will generate returns in the long run, and it will be good.
Right.
So that's a tough one. I think it has to become part of the curriculum in the colleges and the schools as well. To teach them the basics of investing.
Right.
While we are certainly there to solve it, but we don't have those forums.
Right.
I think we certainly want to look at using some of these forums and trying to get there and do it. So we have done it earlier with IPFA and done it for colleges, where we have told about that a basket of stocks is less riskier than a couple of stocks, having huge exposure on those, right? So those kind of diversification benefits, different asset classes we have covered there.
Right. I mean, that's good that you're also investing your time in that, because hearing from people like you would give it some kind of a logical explanation, because as you said, there's a lot of clickbait around there, right?
Yes.
Invest this much, get this much, and which is not really accurate all the time. What kind of philosophies do you use yourself when you're investing or suggesting an investment strategy?
So the philosophy which we adhere to in terms of, it's about risk management. It's a key principle. We did a survey across, and we found that 90% of the people want moderate returns, and about 80% wanted good liquidity. And then the 40% around the population wanted their capital preservation. That means they don't want to risk the capital also.
Right.
So after doing that, we developed this philosophy around risk management is the key. Don't let that go. And equity is a very good asset class. Mutual fund, direct mutual funds is a very good asset class where the liquidity is there. So we focus around these asset classes. In terms of advising on the strategy, we have built a multi-factor model.
Okay.
Now what that multi-factor means? You have heard of value investing, momentum investing, growth investing. Now, you combine all of these. What that means is you should have a mix of all. You should not be just focused on one or the other. As of now, let the market is on an all-time high. What would I be buying? I would rather be buying value picks, which means they are valued less because most of the stocks have already run up.
Right.
So momentum is missing. You go to the value, but there are times when the market is on an all-time low. What do you pick?
Right.
Then you pick momentum stocks,
Right.
and then who are picking up momentum. That will be a longer journey.
Right.
You also do a lot of sector rotation. That means which sectors, which business cycles are doing well, and then you pick up those sectors which have particular strength, right? And then you build on that. So multi-factor model with capital preservation and risk management built into it.
Right.
I would just say that is our investment philosophy.
Yeah. And I would like to know your thoughts about diversification. Like, how much is too much is what I want to know.
Yeah, diversification is, I would say, it's not overrated. But I have felt that in the current VUCA world, earlier it was like 30 stocks basket. 30 stocks is a good diversified basket. But now with all the technology there and all data-driven insights and all triggers getting generated, you can actually manage a 50 stock portfolio, a 100 stock portfolio also. Is it more diversified? I would say, if you have 1 crore rupees and you have exposure of 1 lakh rupees in one stock, and that stock goes bust, how much did you lose? 1%. That's how it is, right? So in the current VUCA world, I would say you should diversify to an extent because it is digitally managed, and we do it very well.
Right.
Because it is all automated, it's data driven, it's the technology enabling them, right?
Right.
So I would say there is no upper bar now.
Right.
And 30 should be the minimum.
Minimum. All right. And what kind of common mistakes are you observing that are happening in an investment strategy that you try and also resolve with your clients?
So what happens is when people, let's say, have a portfolio of mutual funds and stocks also. Now, behind mutual funds, there are equity again. People don't do the deep dive and understand that, I have got that stock also through a mutual fund. And I have it through this. So they have developed an exposure to certain stocks unknowingly.
Right.
And they don't know there's such a huge exposure. So they need to understand this, and somebody needs to do that data-driven insight and tell them.
Yeah.
I think that is the biggest
Right.
mistake probably people do, which is they don't know it that they have done it, right?
Yeah.
And that is where we come in as well.
Right.
And the other is around they take too high risk. And it's like going all in. I think there are time to get all in. There is not time like all time high. You really need to sit on a bit of a cash. You know, geopolitical uncertainty is going on. So a little cautious approach towards investing is what I would suggest.
Right. The markets at the moment have been tiding higher, right? Generally. But if you look at the geopolitical situation, that is not that stable.
Yes.
How do you think it's going to affect the Indian market, or will it at all?
Yeah. So, now we are having it. I don't know when does it air.
Yeah.
But certainly, if you look at current situation, the first thing which has happened in the Indian market is SEBI has come hard on the F&O trading. They have increased the lot size from 5 to 15 lakhs. What that means is it will reduce that behavior, right? It curtails the trading mentality and more to investing. Good thing, but in the short run, it has impacted the market in a negative way.
Right.
Second is the geopolitical situation, where you see Iran and Israel situation. Now, if common sense prevails, then the war wouldn't be happening at all.
Right.
But it does happen. Will it escalate? I think the other countries are smart enough to understand that escalation is not the thing, right? So I think it would become one other such thing as Russia and Ukraine on the side, something is happening and it becomes a regional problem and the market stabilizes as a whole. The third thing, which is a much bigger thing, is around China.
Okay.
So the big stimulus which has come into China, if you look at 1 trillion is what the number is.
That's big.
In the last 2 weeks, 3 weeks, it has gone up 33%. The market when it opens tomorrow, it is expected to go up by 15%, something like that, as the future suggests. Does it mean the money moves out of India to those places? Now, there's risk, certainly, right? But according to me, India is still a growth story. It is still going to do well. There can be short-term hiccups.
Right.
But all of these hiccups are opportunities for us to invest.
Right.
and use these corrections to build on the wealth. You can then choose low beta stocks, which means low volatile stocks, so that you build a portfolio which is less volatile compared to the market.
Right.
And then as the market then picks up momentum, then you can move away from the low beta stocks to the high momentum stocks.
Right.
And that some of the strategies will do it automatically.
Right.
So that's my view of the current situation.
Right.
So nothing, we can worry about it, but worrying doesn't help.
Yeah. Worrying is not a strategy, of course. So because you mentioned beta and the markets, is there any sector at the moment that can earn you an alpha? And I don't want to be predicting, any stock things, but generally, is there anything which is generating alpha?
Yes. So we do sectoral analysis across all the 75 sectors which we have. Now, some have already run up quite a bit. Capital goods, FMCG, pharma, IT perhaps did a little bit. But we mark a few sectors as probable, which means they can do well. Now, some of those sectors are chemical industry, which hasn't done much. If you look at the graph, you will see it has been sideways for a long time. There are good picks there, which you can do. Then iron and steel. If the China story is picking up, then probably iron and steel would probably, which has not done well, is a probable sector which would do well. And then there are retail is something, because in the Indian consumption story is picking up.
Right.
You see Zomato's, Titans, and those things are just going up and up.
Right.
And that's the consumption Indian story, which we have always thought about infra. We have always thought about railways.
Right.
But we are not talking about consumption.
Right.
But that consumption is going to drive the Indian growth story.
Right.
So there are sectors which you can easily pick and invest.
And because you mentioned Zomato and a few others, their competitors are also coming, applying for the IPO, and many other companies are going to raise money from the market. I want to understand how is this decision happening, raising money from the investor first and then raising money from the public? How are they going to synergize these two things and, make a strategy which is beneficial to both?
Yeah, see, when a company comes for an IPO, it has to be coming with a reason. Now, there can be two reasons. One is they want to grow. They need money to grow. But Zomato's and the Swiggy's are already big. But they would say they want to go to tier 2 cities, tier 3 cities and all that, right? That you can understand. Yeah. But the second reason, and which nobody talks about, is giving exit to your early investors, the VCs. And that's the sad part of it, that this is more for an exit strategy, but then for a growth. I think there has to be a balance between the two. You should have a huge growth story, and as well as you would really like to give a decent exit to the VCs as well on the public. Is the public beneficiary of this? See, we have seen IPOs of these stocks coming in. Zomato listed at 120, came down to 40 rupees and now gone back. So it had a growth story to ride on.
Right.
But it is not the story for all the startups.
Right.
So they've given the exit, but not have given money back to the public, right? While some has. So I think it is more to individual. We have to look at it at an individual level. Each IPO needs to be looked at individually. But when the equity is on an all-time high, you usually see many IPOs coming.
Right.
Because then either you can raise debt or you can raise equity, right? So at this point in time, equity is cheap. So you raise equity because it's so easily available. You get a good P and price to earning ratio, etc. Right? Debt is costly because the interest rates are high. So there would be time when these companies will raise debt because the equity is very, I would say, costly because the market is on a low. So I think those are the factors which certainly impact. But we need to look at case by case.
Case by case basis. And because you just mentioned about the interest rates also. So there have been interest rate cuts in US and other European markets as well. So how do you think it's going to affect the overall economy? Because Indian economy is also not untouched by what happens in these bigger markets. So how do you think it's going to play out? Yeah,
very interesting. So interest rates, as you have seen that the cuts have started happening. If you look at the US market, they announced a 50 basis point cut. We expect the similar kind of cut from the Indian RBI as well, which is probably next week sometime. Now the point is, with this escalating situation between Iran and Israel and the petrol prices going up by 7% and that contributing a lot to the inflation, because the RBI's main goal is to control the inflation. If the petrol prices are going up, that means the inflation is going to go up, and cutting rates at this time might be a little counterintuitive.
Right.
But I still feel that a 50 basis point cut in the Indian landscape is necessary to reduce the debt. I would say reduce the interest on those debt servicing cost for many of the industries, and also inflation is very much in control as well.
Right.
So that's what I anticipate, but we will see how it evolves.
Right.
A cut will help us. A higher interest rate in US meant that the money was sitting there. If the interest rate cut happens, the money flows to India through FPI route and others. And we need that money to grow our infrastructure and all, right?
Yeah. And how do you see the foreign investors' behavior in the last 6 odd months? Have they been taking out money or putting in money, and why so?
Yeah. See, I think one thing which we have learned is the reliance on foreign investment has been reducing. Now, there are two factors. One is our FDI, it's our own domestic investors, DIIs, have become much bigger, much stronger. The retail participation has gone up as well. There's a lot of investable income sitting with people, and that is flowing into the market through the mutual fund SIP and all. As I heard about this, our DIIs were sitting 6% in cash when the market last couple of days, 4-5% correction happened, right? And they have been supporting it. Had that kind of money flown out earlier, the market would have corrected 10 to 12%. But you see only a correction of 3 to 4% in the market because it has been supported by DIIs and retail investors.
Right.
So I think India is coming to a state where it is supported a lot locally.
Right.
The consumption, the investments, everything, right? The reliance, it is for them to lose if they don't come to India, because then they would come at a higher price point. China is a separate story which has happened, which we need to just see how it unfolds.
Right.
But besides that, there's nothing to worry.
Okay. So, but in terms of headwinds, what kind of headwinds do you see for China? Do you see any issues that come up in their economy? Because they were facing some issues. Will they still continue, or they have completely come out of it?
See, these stimulus packages, I don't believe in these.
Right.
What that does is it brings a short-time disruption or probably create a positive wave. But fundamentals are not solved. They have subsidized their local industries so that the export is cheaper. Now other countries in the Europe are putting huge taxation on these things flowing from China. It's not a very open market kind of a setup, right? Whereas in India, it is more very open kind of a market setup which we have, which is like it will go up gradually. Whereas with China, you will see more ups and downs. Sometimes this stimulus comes, but then some data comes which doesn't support it, will go down again. So it went 33% up, it will go down 15%. So I think China's story, wherever they have reached now, I think the only thing what is going to help them is to grow at a certain pace. And if they do more intervention like these, it might be a short-term burst, but not a long-term impact.
Because they were having these headwinds, at least in the real estate sector, right? With Evergrande and others going bust, to be honest. But they have recovered, but let's see how it pans out in the future, right? Another thing I wanted to ask you is about the elections in the US. Is there any impact on the Indian market or global market that you see? Or is it just another election with its own result?
Yeah, I think, again, we have evolved beyond that now. I think these election results have, in India also, if you look at what happened, the pre-exit poll results came and what happened, and then the result day, what happened. The volatility was just for 2 days.
Right.
And then it went on the direction it was going, which means that the maturity is there now. So election, certainly the person who comes drives the policies for sure. And a expansionary policy is what everybody is looking for.
Right.
Which means there is more capital expenditure to grow. India needs that, right? Whereas for US, it is more the foreign policy which kind of impacts, right? And then so those kind of things certainly has an impact. I don't see a huge impact as such. I think we have grown out of that as well.
Now it's become like a blip on the radar rather than anything else, right? I want to also discuss to you about the investor behavior in the country, right? You have been in this industry for a very long time, so you must have seen it changing. So do you think people are moving towards equity more from other asset classes, or is there net still apprehension towards that?
So my conclusion is equity has become much more popular asset class now than it was back 10 years, 5 years, 15 years. Those kind of scams which used to happen during that time, that took away the trust factor. Also, there was a time since 2020, I would say 12 to 18, 19, and before the COVID, and after COVID it went up again. Equity has given very decent returns compared to all the other asset classes. People invest through mutual funds as well, which finally comes into equity only, right? Most of it, per se. So equity has become, see, if you look at it, equity gives a annualized return of 15%. What that means, in 5 years, you double the money. There's no other asset class which gives you that. There can be volatility, but then in 5 years, it's going to give you that. 15% is a very nominal return, but it has given much more in the last 3-4 years. But if you look at it, I feel equity is actually, you own part of the company, right? India being a growth story, those companies are going to grow multifold. So if you engage in that means you are also looking to grow 100 times. So it's all about good picks. It's all about looking at all the analysis, putting effort and picking up those right assets, right? So I'm very bullish on equity.
Right. And also, what about the other asset classes, right? You have real estate, you have gold, you have debt. Do you think those will lose their shine a little bit because they don't have the, returns that equity class has? But do you think that also it has to be balanced, or like how do you balance that thing?
Ideally, if you are constructing a portfolio, you should have diversification, not just within equity, but it's across asset classes. So you should have some exposure everywhere. How much, where, when is the question,
right?
Which means you can have more exposure to equity at a time when equity is on an all-time low. I say I take out everything, put it on equity, right? But if it is all-time high, what do? Then I just take it out and put it somewhere else, maybe gold, and then say it's a safer bet because there's geopolitical scenario happening. So 20% of the equity you take out. I think it is about the allocation piece. Will they lose shine? No, because things will keep changing. There would be a lot of scenarios where all of asset classes has a value. The thing around equity is the liquidity part. There's a T0 settlement coming, which means I sell today, I get the money in the evening. It is becoming that liquid. So liquidity is going to help, but liquidity also drives a very different behavior also, risk-averse behavior. So whether we want people to invest for long term, but then we provide liquidity like this. You understand what I'm saying, right? Exactly. It's counterintuitive, right? But then real estate is very liquid, but then it still doesn't give the return, but people still invest in real estate, right? So I think it's about the allocation part which we need to look at. But all asset classes will exist for various reasons.
Right, of course. And do you think that a lot of money has come into the equity market, especially from the urban areas, because the real estate has become explosively expensive, right? Is that just the reason, or is just more zero dhas and grows, or it's easy to invest? Do you think that, like, what the factor really is?
I think to some extent you are very right that the real estate becoming very costly makes the money flow into equity. With the ticket size is so high, where do I put money? The fractional ownership is still not there in the real estate area, right? I think that sector needs to evolve for the money to flow in there as well as liquid as equity. So fractional ownership is something which needs to come there. I think equity has that fractional ownership thing.
Exactly.
If the stock gets too costly, a stock split happens. So it becomes reachable to a wider audience, right? So I think that's you are right. I think obviously it's the problem with that sector, with this pricing and sizing, I would say, which is causing more
to the equity markets. Also, I'm going to ask you a very cliched question now. From a persona point of view, who should directly trade in the market or invest their money and pick stocks versus who should do just mutual funds or not do it directly? Do you think there is a behavior behind that?
Yeah, I think my point is how much time you have had hand to do the analysis. Now, there are various tools available in the market which can do it for you. This basket of stocks concept is very easy concept. You can buy thematic baskets, you can buy, mutual fund, you can buy mutual fund as well. If you don't have the time to do the analysis, then you should go for those options. If you have the time and you can analyze it a bit, then you can do a much more creating a basket for yourself, creating a stock portfolio for yourself. But my point around this is the person should do what he's good at doing and should focus on Monday to Fridays in the job or whatever he does well, and let the professionals create wealth or multiply wealth for them. I think there is a behavior which probably people thought sometime back that Indian investors are not willing to pay for the advice, but that has changed. People are willing to pay because they want to focus on their core activity now more.
Right.
And that behavior is seen across.
Yeah, I mean, also about just portfolio management or taking advice. What should a layman or a person who has not used that service look for in a portfolio manager or a service, investment service? What are those things they should be aware of?
Well, I think they should look at in the portfolio manager. First of all, they need to probably explain what kind of roadmap they want to take, right? How much capital they have, and then understanding the background. Is he a SEBI registered entity?
Right.
I think that's very important because then they are audited and other things happen. So regulation, they're covered under regulation. So you get advice which is much better, right? Taking an advice from an LIC agent might not be the best advice you would get, right? Because they are selling it to you. Because they are earning commissions from there, right? They are not doing it for your sake. So that's probably you should look at those factors within a little bit of background, certainly, which means what have they done, what kind of help they can give you.
Right.
And I think this market is evolving. I think with the SEBI regulation around reducing some of the stringent criteria around getting a RIA license means that there would be more such people available. Right. But do they have the tools to advise you is a question. And you need to check whether they have the tools as well or not.
Right. And because you're talking about tools, I also want to talk to you about Fintech, right? How do you see that developing in India? And what is going to be the competitive landscape? Like, because it's going to work, right? Because it's working. So does it become cheaper to use or more fragmented market? How is it going to happen?
See, technology gives you the scale, reduces the cost. For instance, if somebody was to go and say, I want to invest, let's say 25 lakh rupees, spread across 25 stocks, and you go into the PMS world, they would charge you annual maintenance charges, 1 to 2%, and then do a profit sharing on top. 50 lakhs and above is what PMS do. If now they are committing about, we don't earn till you earn. What that means is it is changing. Technology is changing it because it has got the scale to do it now. And also it's very beneficial for the investors. It is available cheap also. You might get an advice of around 25,000 rupees for a year. You can get an advice to run a portfolio of 25 lakh rupees, which is very nominal and which was not thought of earlier.
Right.
So I think technology is enabling. It is providing the scale, and I think Fintech is certainly, I call it wealth tech.
Right, wealth tech. Yeah.
So I think it's gonna shift I would say shift it towards the masses, right?
Right. Now I want to kind of talk to you a little bit about yourself, right? So you had a really long corporate career, and how did it help you build this company?
Interesting. See, corporate career, see, I've been a learner for a long time, and I've been learning either in office or taking some education, right? So something like that, and also applying it. I think application is very much important. Now, this is in terms of what I do right now. The thing which I've learned on the corporate side is more around people. People are the key to building anything. It should not start with what I want to do. It should start with who can do it for me. And then you recognize that person, you bring him on, and then you have and empower them to do it. I think building the right team is what I have learned in the corporate world, which has helped me in IntelliInvest as well. So right people at the right place and let them do what they do best.
Sure.
And then you can do what you do best.
Right.
I think that's where I am.
Yeah. I mean, that's really good advice, and I deeply believe in this myself. And then it must be a very hectic schedule, right? Running a company, building it, growing it. So how do you manage your time personally, and also what do you do outside of work?
Outside of work. So I've got a dog as well.
Yeah.
So taking him out for a walk
Yeah.
is certainly there. I've got two kids, both boys. They are sportsmen as well, so they want to play TT. They want to play lawn tennis. I certainly go with them. In the evening, I've got a group of my in the friend in a society whom I go and play tennis with. And at times, I just go for a run, just listen to a book, and put AirPods and then go around. And so I think this is what I'm doing right now. What I'm missing is something, going for a long drive and not able to find time to do it. And probably Diwali is coming, and probably I would drive down to Ambala at my ancestral home, and that is what I look forward to. Not done a drive. I would like to do a Delhi Mumbai drive, but that's something I see when it happens. So this is what I do, but lots going on. So I think it's a very hectic space to be in, but I'm able to find peace with the work and all the other things going around.
Right, right. Because you mentioned a book, so do you have any book recommendation for people to learn about finance or investing?
I think it depends upon what asset class you want to. There are a lot of books around mutual fund. There is, I think, Halan's book is
Monica
there.
Hallan's book,
Monica
yeah.
Halan's book is
Yeah.
there on mutual fund. I think I read a lot of books around entrepreneurship.
Yeah.
So I think Good to Great is a really good book to read. On the investing side, I think if you read books, you get lost in ROE and all those. I think it is more around you looking at analyzing yourself and doing it yourself rather than reading books on that area.
Right.
So that's where I am.
Yeah. And I've read at least one of that book. So yeah, I like that book as well. So my last question is, 2 or 3 advices for investors in India.
Then I have to think two or three.
Yeah.
So it'll just be 3, right?
Yeah.
One is stay away from derivatives. 9 out of 10 lose money. It's meant for algo trading, institutional investors, not for retail investors unless until you have learned the trick to do it. Long-term story is a second point. Long-term wealth creation is it's a boring journey.
Right.
So, and boring is what builds.
Right.
Some of the boring things you do repeatedly, you have to do it again, and then you master it, and that's what it is all about, right?
Yeah.
So investing is boring, but it's much more fruitful. The advice is immediate gratification. Just avoid that. Go for the long haul.
No.
And start early.
Yeah.
Start early. I think that's the last advice, probably from me.
Yeah. So thank you very much, Manish.
Thank you.
And giving us your time. It was absolutely wonderful speaking with you.
Same.
And I hope, whoever is listening will get to learn a lot from this. Thank you so much.
Thanks for having me here.